Good afternoon. The National Association of Credit Management is pleased to welcome you to today's webinar, Cash Collection Strategies to Improve Business Cash Flow, B2B. Before we begin, we've got just a few housekeeping notes to go through. Today's call is being recorded and all participant lines will be muted during this broadcast. We hope that you have questions for our speaker. Please send all questions in using the Q&A box on the bottom of your Zoom screen. I would now like to introduce today's speaker, Suleiman Ali. Suleiman is the Global Process Owner for Cash Collections and Region Lead Europe Cash Collections for Nokia based in Hungary, Budapest. You can read his full bio on the NACM website. Suleiman, the floor is yours.
Thank you very much. And good morning, good evening, good afternoon, wherever you are in the part of the world. Cash collections and strategies to improve business cash flow. So the fact is that one of the earliest lessons that I've learned in business and business controlling, that was that balance sheets and income statements are just fictions. Only cash flow is the reality. Cash flow, therefore, is the best way to track a company's performance and viability. If you're able to keep a close watch on your cash flow, you can then project wherever your income is sustainable for your growth, and if your balance sheet is accurately accounting for your assets and liabilities. As a matter of fact, there are so many matrices around down there that you can pick anyone, but I personally believe in a good, healthy cash flow as a good sign of your positive outcome of your business. My name is Suleiman Qureshi, based in Budapest. I've been working in multiple parts of Middle East and Africa and Europe as well on different business analysis, project controlling, business controlling domains, but primarily I'm a cash collector and that is my profession. So currently I am focusing on the development part of the collections professionals, enabling them to drive, devise, and deliver the mode of operations for collections. So did you know how many currencies are there in the world? Approximately 180. And the most funniest currency that I've seen so far, that was in Cameroon. That was bottle caps. So there was a time back in 2005 where there was a brewery there in Cameroon that started printing prize offers under the bottle caps of beers to boost their sales. And eventually it turned out that those were so famous that it was used as a currency over there. So that was quite an incident that I've found very interesting when it comes to the cash collection and looking at the perspective of a currency down there. Coming down to the business, today's agenda, as you can see on the screen, we'll look into the knowledge of processes, how important it is for a cash collector or a collections professional to understand the processes on the first place. SLAs and the dependencies we have. I'll also cover in between the SLAs some KPIs and importance of KPIs for a collections professional. And then there are dependencies, what kind of dependencies we have when we look at the overall process flow, when we look at the overall engagement of collections professionals in cash collection. We'll look at the comprehension of customer behavior. I think one of the most important part of cash collection process and the soul and heart of this whole mechanism is to understand the behavior of your customers. And it's equally important as much as you need to tidy up your internal setup to understand how your customer is going to behave so that you can support them in enabling to pay us in time. We'll also look at the analysis of dispute, one of the areas of interest, I'll say for me, because disputes is one of the key, I will say, hurdle in getting the payments from our customers. And it's primarily our own matter that we need to fix. So I believe it's very important for any cash collections expert to understand the nature of disputes and to also understand how we as collections organization can swiftly manage to get those disputes sorted. So that's what we are going to look at, and most importantly, the corrective measures and control that we can bring along with this. We'll also look at a little bit on the applications of the tool as well. There are so many tools on the market. I'll not market any tools here. I'm not going to sell any tools here, but I'm going to give you a little brief on what kind of tools are suitable for us as collections professionals. One of my favorite quotes, and it's all about planning. Basically, it's all about planning. So the more proactive you are as a collector, the more planned you are in turning your whole networking capital into cash, the better it is. So the reactive collections is basically firefighting. So the best mode is that you plan and then you move on. So going forward, when we look at the businesses, in my personal experience, we ignore the cash flow. And it's just like you are on your way driving and you're focusing on your speedometer and your speed. And all of a sudden, when you're focusing on the speed, you realize that your fuel tank is empty. Exactly like that, businesses ignore the cash flows. And eventually it turns out that they don't have enough cash flow now. So cash is basically blood and life of the organization. I don't really imagine an organization with a poor cash flow to grow itself on a sustainable level. So that's the basic, in my opinion. So coming down to the knowledge and processes and SLAs, basically, what is cash collection? Cash collection is also known as payment collection. It's a treasury function that describes the process whereby a company recovers cash from other businesses to whom it has previously issued an invoice. So what is the basic unit of cash collection then? It's an invoice. So the key objective of cash collection is to get an invoice paid on their due dates. That's the basic objective of cash collection organization, and all the unpaid invoices are considered outstanding. So that's the very basic. Now let's come down to the process. And when it comes to the process bit of it, I personally divide the process into two basic areas. So first of all, when we look at the overall process itself, we have pre-sales activities, which means that in this part, an organization covers the contractual bit of it, which means an organization goes down to the customer and they agree on a contract. What's a contract? Contract is a legal obligation whereby a customer and a vendor both agree on their obligations. In a way, the vendor agrees that this company has to deliver certain equipment, services, or licenses, softwares, on a certain timeline. That is the obligation of the vendor or the seller. And the buyer, in turn, agrees that after the correct and contractually agreed delivery, the buyer will pay a certain amount on a certain payment terms. That is basically contract. Of course, I am highlighting the basic cash collection perspective of the contract here. The contract is signed, but before that, there is a lot of quotation to and fro, communication and inquiries, contacts, agreements, and eventually we end up in a situation where we have a contract. Upon the contract, we go down and create a sales order. And if few of you have been working on SAP, they can correlate this model and what I'm saying with SAP terminologies as well. For example, QC, for example, sales order, etc., etc. So order processing starts. So the moment we start a process of the order, then the delivery is triggered. And delivery of it may be the services, maybe equipment, it could be the licenses, it is done. And once it is done, then the shipment is completed, everything, all the formalities are completed, then an invoice is raised. The moment an invoice is raised, that is part of our accounts receivable. And that's where I'll take a pause, because now, as a next step, we'll go into more detail of this accounts receivable process. But before that, we also need to understand this fact very, very well, that the process of reaching till an invoice is also equally important for us as collections to understand that how did all this mechanism work? And it reached to a point that we were able to raise an invoice or create an invoice for our customers. And by the way, we did not submit this invoice yet to our customers, and that's one of the parts. In some organizations, we have this kind of a setup with logistic function, whereby some organizations keep or prefer to keep this function with cash collection organization. This depends on the preference and priorities of your order to cash setup, how your process is enabled and organization is set up. I find both of them equally functional and equally good. So the function behind this is very important, because moment you will reach onto a dispute, then you will need to run back and reverse engineer everything here so that you can reach to the root cause of the dispute. That is why it is very important, especially from the trigger of delivery till the time the delivery is completed, because the moment delivery is completed, then all the relevant documentation for your invoice is coming across. So when we speak about an invoice, it's not just an invoice. The invoice also has associated documentation along with that. It could be AOA bills, it could be bill of ladings, it could be acceptance certificate from your customers, it could be anything that proves that you have delivered the equipment, you have provided the services, completed the work, or you have managed to successfully install a software to your customer. Any of these documentation must be agreed along with the contract with your customers. And that's also one of the most important areas that a robust cash collection organization keeps an eye on, that what are the deliverables we agreed in the contract that we are providing to our customer. In a case your invoice is not accompanying all those deliverables or the documents that you have agreed in your contract with your customer, then you definitely are going to end up in a dispute, and it's less likely to get paid by the due date. So this is very important, I will say, the part till we reach the invoice milestone. And after that, of course, we have our accounts receivable. So the moment an account receivable raised, what happens then? We'll move on to the next dive of this particular part. So what happens is we start, and by start mean we start this process that I highlighted a bit before, and then we start to process the bill. A bill means an invoice. And if an invoice is created in the system, you will be able to see a receivable in the system. You also can see that if there is no start and there's no bill, still there's a cash receipt. That cash receipt without an invoice could be an advance payment. So you can agree with your customer that without an invoice, I can get an advance payment based on the contract. There are multiple ways that organizations are processing their advances and collection of advances. For example, there are setup of down payment requests, or there are setup of submitting a contract and asking in the contract that upfront we will be paid an advance payment. Whatever suits, that is dependent on the mechanism, the country requirement, and the environment of that particular business. It also matters a lot what kind of industry you are, because some industries are pretty much hybrid, pretty much connected, pretty much efficient in the cash flow, especially the FMCG. And when we talk about a little larger businesses, the cash flow is slightly slower. Coming back to our process, when we look at the invoice creation, after that, the receivable is created. Once the receivable is created, that is the point where our job as collections professional starts. So as a cash collection expert or as a cash collection agent, my job is to make sure I run all those activities which are necessary to enable me and my organization to collect that cash from my customer. So first and foremost, I will send out a statement of account to my customers that, Mr. Customer, these are the list of invoices that we have submitted to you on XYZ dates, and we expect you to pay us this amount by the due date that is on the face of the invoice. And for those of you who don't understand that, what is on the face of invoice? A face of invoice contains many important, I will say, components. One of the basic components that you will see over there is Incoterms. You will also see the description of the purchase orders, for example. You will see the value of the items which you have sold to your customers. You will see the description of those items. Then depending on the legal and legislative requirements, you will find multiple areas highlighted over there, for example, withholding taxes or any other calculations that are required legally. You will also find an account number of your own organization in the bottom of that invoice, demonstrating to your customer that, Mr. Customer, this is a reminder, you have to pay on this account number. So this is the basic that we send out the invoices, and after that, statements of accounts. And once the statement of accounts are gone, we continue to follow up our customers. So follow-up means that we continuously reach out the customer, treasury or payable department and ask them that what is the status of our invoices. Let's assume that you've got a confirmation from your payable department that this moved to the technical department for the verification now, and you can continue following up your technical teams to get the status and update of your invoices. That's the most important part, that you run it through the cycle of the customer, and eventually you get it on a position where it is ready to be paid. Usually when invoices are ready to pay, you get a commitment from customers. That is a promise to pay date from your customers. That is very important. And I believe any collector is happiest when he or she sees that we have a commitment from the customer for payment of our invoices. There are situations where invoices are not payable. If those invoices are deemed as uncollectible, then we simply go for a write-off. The write-off process means that we knock it off from our systems because that is not a legit receivable to be collected from the customer. As a matter of fact, at this point, after the write-off, it is cleaned from our balance sheet and the process is finished. On the other hand, when you are following up with the customer, promise to pay date is not enough. We need money, not a promise. So the moment money comes in, then our cash receipt process starts. Cash receipt, in some companies we call it cash application, in some companies we call it cash allocation. The process of cash receipt is to allocate the invoices with the payment. So whatever the customer has paid, we have to allocate accordingly with our receivable in our books. So that's the point where some other formalities may come into the play, where you have VAT, withholding tax, etc. So you align all those deductions. If there is some early payment discount, for example, or something like we call it a deduction of penalties, it's also possible. So that can be aligned. And after that, the invoice is cleared in full. In a case it's not cleared in full, then we repeat that process to get all the money back. Until the time the money is paid, the invoice will remain open in the system. So that is how we usually follow through the invoice till the time it is fully paid. Now, we have had a look at some of the cash collection activities, which I'll definitely go into more details as well in a moment. But the point here to understand is that there is, by the books, a process that we must follow. That process has some of the activities in a very comprehensive way, sometimes documented by the collectors. I've seen some collectors very, very organized, and that's actually the key part. So right from the moment an invoice is in the system, they write down their steps, that what exactly they have to do after this moment, after this moment, and after this moment, till the aging of the invoice. And I'll come to that part as well to demonstrate how the aging is understood by us, by collections professional. So moving on to cash collections activity, above all, don't wait to start making collections efforts. That is one of the very, very basic themes that I've learned in cash collections, that don't wait for invoice to get overdue. Don't wait for the due date. No, it's very far. Don't do that. Immediately take actions, proactively reach out to your customers, build up good communication with your customers, not just for the invoice follow-up, offer them help to process through whatever is there, because eventually it's in the benefit of both organizations to pass invoices through smoothly and get your monies collected. So the longer an account remains unpaid, the less likely you would be successful in collections of the debt. So that's very important. When we talk about collection activities, the first and foremost that comes in my head is the follow-up of the customer. So once an invoice is submitted, immediately follow up, proactively follow up your customers. It could be it could be an email, it could be a meeting. Now, while we have this COVID situation, the meetings are a little less, I will say, likely to happen in the collections community very specifically. And if you do go for a meeting, I would recommend you to follow all the precautions, because the spread is still around. So I personally, when I speak with the collections community, I prefer them not to make face-to-face meetings, especially in these times. And I prefer them to make a phone call or a meeting on virtually, like on Zoom or Teams or WebEx, and interact with your customers. Send emails out, but don't rely on emails. I recommend a phone call. That is more personal. Number two, you can directly ask the matter of the fact rather than just communicating on emails. Emails are good for sending out an Excel spreadsheet to remind your customer that, hey, next week is the due date and I'm expecting this monies. But follow-up generally goes on phone, on a more personal, let's say, meeting setup. It could be, as I said, Zoom as well. So the purpose of this follow-up in this collections process is that we get feedback from our customers. The moment the feedback is in, then we as collections organization must update our diary. That diary could be a tool as well that your company is operating in. So use that opportunity and keep a record and a track of your communication with your customer. That's very important. Some of us are very lucky, considering the I will say volume of the business we have, that we have some exceptional tools to manage this follow-up, to manage these diaries. There are some communications automatically managed by some of the good collections tools as well. And we'll come to this part as well in a moment. But the purpose here is that we must keep a track of that. While we are taking notes and record, we must also note that we will definitely get some of the feedbacks which will be leading to the disputes. So we need to open then disputes as well. And opening of disputes means that we need to immediately start acting on getting the closure of dispute as soon as possible. That is something very important, because the time lapse between an opening of a dispute until it is closed, that is a pause for your money and the process of that money. So it's not moving at all, because this is somehow your fault. Dispute is basically your own fault, which you did not fix before sending the invoice. That's why it is most efficient that close it as quickly as possible and get it back to your customer. In a case, if you are successful in getting the monies, then the next step is that you immediately go for getting the cash, and then cash receipting and allocation process. And it must be updated in the system as well. And while you are done with all these activities, keep maintaining your diary. This is what my basic learning is, that keep maintaining my diary when I'm following up with the customer, then collecting the money, and then I'm clearing it in my system. That's very important. One very important point that I must emphasize, as much as we are sitting in 2022, I still feel that I should communicate that threatening and harassing collections efforts do not work. So they basically alienate your customers and are highly unethical. So I do not recommend that at all. So, and especially when you're communicating, be mindful about that. And furthermore, this kind of making threats to the debtors is illegal as well, and strictly enforced back. So this is not recommended at all. So we must consider the highest ethical observations as well when we communicate with our customers. That is one of the key learning that I can share based on my experiences that I've seen across the regions. So now it's the time for a very quick quiz. You will see on your screen a quiz. I would encourage you to share your feedback with me, and then of course I will share with all of you the right answer as well. So what is it? That is an arrangement to have debts collected by a third party for a fee. Is it factoring? Is it aging? Is it forming? Is it crediting? What it is? I look forward for your feedbacks. We have 2 minutes, so we will close this, and then definitely I will share with you the feedback, the correct result for this as well. And the choice is only one. You have to pick only one. Okie dokie. Thank you very much for your votes. And I can see the highest number of the votes are coming for factoring. And ta-da, this is the right answer. Well done. So factoring is basically an arrangement to collect by a third party. A third party could be a financial institution, a bank, or something like that, which can facilitate based on a little bit of fees, which they will collect from both the vendor and the customer, both organizations in a bit, and then they will enable the whole transaction. This is for financial facilitation. Good, very good. Let's move on. And then I'll move on to some of the SLA. So what is an SLA? What's a service level agreement? As you can see on the screen, we have a billing cycle. So we start billing, and after that, there's a due date for an invoice. And once the due date is reached, after that, it starts getting dangerous, more and more dangerous. And it is 30 to 60 days overdue. And then eventually it's a time bomb when it is 60 to 120 days overdue. And it's very, very less likely that you will get that money. But in between this, there are some, I will say, service level agreements that can enable you to collect your monies. And I'll move on to my next slide where I can demonstrate this all to you. And I'm reflecting back to the process that we just saw. And in the process, you can see I'm coming in the middle of this process, which is the cash collections actions. So what are our actions as cash collections organization? So if you recall, I was talking about follow-up with the customers. I was talking about feedback and updates and track them down and note them down in your diary, then closure of the disputes, if you recall, then cash receipt and allocations, and then updating your diary as collections team eventually once all the activities are done. So the red circles are demonstrating my service level agreement. So my service level agreement could be that I have 5 days of SLA to follow up on the invoices to make sure that I have all the necessary input before the invoice get due, all the necessary input that I must have with me to have a clear understanding of what is the status of invoice and where it is in the chain of all, commands. So the 5 days is let's assume it's my SLA that I will keep or I'll take to take this step. Then, for example, feedback and update in the tools, etc., I have another 10 days to complete that. But it is number one, step by step. Number two, to discipline me that when I'm running my activities, I am disciplined enough to focus at the right time on the right things. So SLAs basically bound us, number one, to make sure we deliver what we are supposed to. And number two, we deliver within the agreed time frame that we are supposed to as well. And that time is agreed in line with the payment terms we have with our customer. So for example, if we have a payment term with our customer of 30 days, that's quite a short time. Our activities or SLAs must be a little bit tightened up. But when it is 120 days, 150 days, our SLAs definitely will give us more breathing time and reaction time to deal with it. So we have 10 days, and after that, we have 2 days of SLA for dispute closure, which means that I must close or I must try to close the dispute within this time frame on my own end. Then cash receipts, we have 24 hours. So the moment we get the cash, we get our cash application. Some companies have collectors doing this allocation or receipting. And in some companies, we have a very specific organization developed cash applications team who are performing these activities. So whatever the case may be, let's give 24 hours for each one of those people to allocate the cash to our invoices, and then another day for the collector to update the dates. Now, I will just take a minute on this cash receipt or cash allocation part. This is also one of the integral parts, in my opinion, for a cash collection organization to make it quite robust. Reason being, if we will take more time in allocating the cash with the invoices, then we will give more exposure to receivable, which as a matter of fact is paid already by the customer. But just because our internal matters, we couldn't close it, we will still have it in the accounts receivable. And there's a chance that we will send a reminder to our customer for this amount, which is already paid. So the best is, as soon as you can clear that from the system, better days for both organizations. So that was a little bit on the cash application and our SLAs as well. Moving on, some of the KPIs that like in the world of collections, KPIs or key performance indicators are incredibly and vitally important in measuring the recovery of the receivables. So KPIs are a form of a measure used in evaluating how well an organization or an employee is meeting certain performance goals. That is the primary purpose of KPIs, although what fits best may vary for different collections departments and organizations and teams, and many collections professionals may have their own favorite KPIs as well. Let me explain a little bit about a few of the ones you see on your screen now, and how they can reflect the success and health of your operations. The first and foremost is very famous one, DSOs. I'm sure days sales outstanding. So DSO is the number of days it takes a customer to pay after an invoice has been generated or a sale has been recognized or made. One of the most commonly used metrics, I've seen many organizations following this one. DSO is used to calculate how long on average it takes to collect from debtors. This makes it easy to compare the performance of our organization against the others in industry, whether how much your performance could stand to improve as well. So this is quite a common, as I said, KPI. So it's very easy to take a benchmark as well in the industry, that how well you are doing compared to your competitors in the market. Ideally, the number should be as low as possible, as a higher number is reflecting lack of effectiveness of your organization's part. However, it definitely is worth noting that the matrix itself generally only provides you more of a global view of your organization's efficiency. And you must rely on other KPIs as well, which are more specific and particularly to your operations. So that's also very important. The next one is CEI, that is the Collector Effectiveness Index. So CEI provides another goal view of your organization's operations that is commonly used in many organizations, sometimes confused with DSO, but this is different. In this metric, it is reflecting an organization's ability to retrieve their accounts receivable from customers. It's a measure of amount collected during a specific period of time against the amount of total receivable created within the period of time. So when we talk about the DSOs, that is quite a KPI with at least 3 to 6 months of accumulated calculations. But when we talk about CEI, this is more specific to a month's receivables, how many receivables were created in that month, and how much successful I was to close out of it. For an example, my team invoiced 1 million of invoices, which were falling due in this particular month. And I could manage only 500,000 out of this. So this means that I was efficient halfway down on the overall receivables, which were created in this particular period. So that's how it is, let's say, judged. It is measured as a percentage with an organization of 100% of CEI collecting all of the receivable ever invoiced. That's the best situation. Generally, the targets are set from 80 to 90% within organizations. But of course, so CEI, the better you can do, the best it is. So 100% means that you cleared anything that you had invoiced in that particular period. That's the best. On the other hand, the lower the DSO numbers are, the better it is. So they correspondingly increase and decrease. So if the DSO number is going down, your CEI will go up. So that's how they correlate with each other. Then the next one is very interesting and one of my favorite ones: how many disputes we were able to close in that particular month. That is also very important, or in a quarter, for example. So this is also very important, that we measure how good we are in closing the disputes that we have. And that's also reflecting on our performance in terms of getting the smooth invoicings toward the customer. Honestly, on the first place, we should enable a process that makes right invoicing on the first time. That's the ideal situation. But if we have a lot of disputes, then we need to measure ourselves on disputes as well, that how good we are, how efficient we are in closing the disputes. And last but not the least, that's also important: promise to pay accuracy. So how much accurate we were in getting promises from our customers which were right. That's also very important to understand, that I got commitments from the customers, but those were false. And that gives me a chance to earmark all those customers who are breaking the promises off and on. And then eventually that's an embarrassment for myself and my company that we are not able to reach those targets or reach those forecasts and inaccurate forecasts because the promises were broken for that particular period or financial, I'll say, quarter. So these are a few of the KPIs which are generally considered by the collections. And I believe if we consider any two of them as a priority for ourselves to look into our collection efforts, I think it can give a good measurement to see how good and efficient we are as collections organization. Okay, then I would also like to give you a little bit of highlight about setting up your dynamic and exciting organization, making it profitable. So when you look at the areas that you need to improve in terms of efficiency, number one, I would say when you want to improve your collections, foremost thing is that move the things from the clouds. We are in 2022. Don't keep the things on one operating system, on one, I would say, device. This is not recommended. When you have more, I will say, cloud-based things, digitalized processes, it is more efficient. So, I mean, we need to stop these tedious and repetitive administrative tasks to engage our staff in more, let's say, more demanding tasks rather than this administrative, repetitive operational processes. And we need to look into the processes and time to time advance them, digitalize them, so that we have more efficiency in our processes. Then make it easy for our customers to pay with the automation as well. So connect your ERPs with the customer ERPs, EDIs, and make kind of a way for them as well to make the payments easy. So how can we make our customers' life easy with this payment process? We can look into that as well. And I think these are the aspects we must consider when we are looking at improving the productivity and focus on the efficiency of business operations. I think we should now look at the other end as well. So the next part is set up helpful notifications as well. Now, as I was stating, that there are some softwares which are automatically generating notifications to yourself and in some cases to your customers as well, notifying them that, hey, the invoice is falling due in next, let's say, 2 or 3 days. So you have to take your actions next. So this is also very important that you set up notifications, and there are plenty of apps in the market. You can use any of them to utilize yourself the chasing of the payments. And trust me on this, if your organization don't have enough budget for the digitalization and these apps and these cloud-based stuff, I have seen people creating macros for themselves in Microsoft Excel and using that as collections tool. And that was pretty much efficient. And I'm not talking about very far. So this is also possible. It's all about how much you can improve your productivity with best tools that you have available with you in your hands. So that's how it works. So with these few tips, I'll move on to the next slide, and I have one more quiz for you as well. And the quiz says, how often are KPIs formally reviewed for AR process at your organization? Is it weekly, monthly, quarterly, or annually? And I will give you then an idea that how frequent is it efficient to consider these kind of updates. So I look forward for your feedback on this. You can also share your imagination, what you believe is a good timeline. You don't have to quote your organization's AR process and relative KPIs update, but you can give me your idea as well. I am curious to see how you comprehend it, how you imagine it in your real life, the KPIs and their, I will say, motivation to review them. I'm quite curious about it. It's one of the important areas, I believe, as a process owner, to understand that how quickly we need to get back onto the table and look into what kind of let's say, timeline we have. There we go. The results are here, and most results are from monthly. Very good. There are some of our collectors saying it's weekly to be good as well. Some of us are saying quarterly, and a few are saying annually. Well, I will say all the answers are right, because depending on the KPI itself, some KPIs, or rather most of the KPIs, demand to be reviewed quarterly. And if you look at some of the SOX controls, those are also on a quarterly basis relevant with the AR balances or advance payments. Monthly as well, if the KPI is really important and you have process flaws there, I think I would also go with the monthly review. But monthly frequency is a little bit too much when we look at the process innovation, process overhauling. It can be a little bit tedious. So if I look at the overall, I will say ballpark number, my call will be for a quarterly review. That will be good enough to test one KPI during the course of a month, and another month, and another month. So give 3 chances to the KPI and the team as well to perform, and then have a review on that. So that will make sense. But monthly is also, if you have bandwidth to review it monthly, nothing better than that. Good. Thank you very much for your feedbacks. That was quite interesting to understand, and quite interesting to see all the feedbacks. Now let's move on. And if I can, okay, I can. So comprehension of customer behavior. That is, I think, one of the most important features as a collector. Sorry, I'm just kicking my desk. One of the most important features of a collector, as a collection specialist, as a collections professional and expert, to understand how can I foresee the behavior of my customers. There are certain factors I would like to highlight. It's no secret that businesses live and die based on adaptability. So in payments, anticipating new trends can be especially challenging. Not only is the market being continually disrupted, but the customer behaviors and expectations are also evolving on a very rapid rate. And now, especially when we are passing through these 2 years of COVID situation, it's been, I will say, most challenging part of the, at least I have seen in over a decade. So yeah, this is where we are. So when we look at the customer payment behaviors, what are the key aspects that I will look as a professional collector? One, how many payment runs my customer has. So how many times in a month that customer regularly pays, triggers the monies. This is important to understand, because probably I'll align my invoicing with that payment runs, so that my invoicing is coinciding with that. Or on the other hand, because I'm not really fully in control of invoices. Why? Because the moment I am contractually liable and eligible to raise an invoice, I will not wait. I will immediately raise it. So that means that I have to then align my collections efforts with the payment runs that customer is running. Non-flexible payment methods. How many non-flexible payment methods that customer has, and how we can support that particular customer with the flexible methods. Disputes. What kind of disputes that customer is raising for me? That's also one of the key parts that I should understand. System challenges. What kind of challenges those customers have on their portals, for example, or on their ERPs that are not really enabling them to pay faster to us, and how you can look into that. At least you can anticipate that their system will take 3 or 4 days in this particular process, etc., etc. Cash flow. What is the situation of that customer's cash flow? You can look at the overall credibility of that customer based on the numbers you have, but that's very important to understand whether they are really, I will say, healthy enough to pay. Financial crisis, any liquidation or administrative issues, if they have any, I will definitely look into that while I'm going for collections. That's one of the major factor that I'll consider. And any other dependency that customer may have. It could be a specific country and the economic environment as well that can be affecting the payment behavior of the customer. So they may not have something directly connected with their own matters and affairs, but it could be something external affecting them. So some of the I'll say, behaviors. And now we'll move on to a very interesting part of this presentation as well. That's the dispute. But before that, one of my favorite quotes that never take your eyes off the cash flow, because it's the lifeblood of a business. This is very important. As I said, you can take eyes off anything, but not the monies when you're running businesses. And this is one of my favorite, Sir Richard Branson. Let's move on then now to the next part. That is the important part, and that is the analysis of dispute. So disputes are very important. Believing that there are all the external factors on making my payment slow, that's false opinion. I believe there are often major issues internally in the organizations which cause delays in payments. So that could be, number one, an opportunity to improve your internal processes with the unpaid invoices being ignored. That is a sign that you need to improve. So first step, identify the causes of the late payments. That's very important. And identify each late invoice, the reason of the non-payment. And this qualifies the evaluation of main issues with those invoices. So put status on each one of the invoice, that what exactly is the problem corresponding to that, and then document it. That's very important. Now, I'm not going into the discussion of the tools that we have or digital, I will say, initiatives, but I'll stick myself to the old-fashioned diary part. So when we talk about the types of disputes, the very first one is on the value part of the invoice. So the dispute could be that the invoice value is wrong. Maybe the calculation of VAT is wrong. Maybe the price of that particular line item is wrong. Maybe some discounts were not appropriately applied on that. That's the first part. Then the format of the invoice. I think that's another very famous part, kind of a dispute. So usually the language requirements may disable us to provide the correct format of the invoice. It's possible I put wrong address on it, or wrong account number, wrong Incoterms, or even wrong address of the customer. This is all the conditions of the format of that invoice. Then delivery completion. If the delivery is not completed and I'm invoicing to the customer, that's a dispute. I'm not legally or contractually obliged to ask customer for the money. So that's not going to work. So that could be a major, I will say, dispute. Service accordingly. If service is not completed and I'm going for an invoice, that is also going to be returned back. And I'm not going down in the detail of descoping. I'm not going into the detail of all the partial deliveries, et cetera, et cetera. These are all the components of delivery and service completion, where we talk about complete and exactly as agreed delivery of the customer requirement. So also, if we agreed a specific product and it's a version of a different product, so if we are not going with the right version of that product, the quantities doesn't matter, that we're not providing the right things. And sometimes delivery and service completion is interlocked. So unless both of them are completed, we can't go for that. So for example, you give a car to your customer, but you don't give the key and it's not working, then it's useless. So in those turnkey projects, we need to go hand in hand, the delivery and the services as well. So looking at this disputes part, let's have a look at some of the major causes of the late payments as well. Invoicing issues. As I said, the missing information of the PO, invoices issued too early or too late, or pricing of the invoices. Then dispute on the delivery or services being performed is a very common dispute that creates problem for us, and the quantities are not corresponding, the quality is not up to mark, and all that. This is all one of the reasons, major reasons. Then administrative issues, for example, accounts payable and us are not, understanding, or we're not on the same page. Payment terms are wrongly applied, or some purchasing conditions are not met, or discounts are not applied. This is very, very common as well. Then buyers' trustworthiness issues. So financial dependencies of the companies and the situation where they are near default, those are very common, let's say, situations where customers can't pay or don't pay, let's say. No effective collections action done. This is also one of the, I would say, lenient or lazy debt recovery or collections. Sending no reminders to the customer can lead you eventually, depending on those circumstances. There are some very good payers as well. but it can lead to bad debts eventually. So that is also one of the reasons that we don't get the monies or late monies, because we're not proactive enough to follow up and chase the invoices. Now I will share you based on the root causes you could collect. And I was saying you can make a consolidated results and a view which shows you, for example, in this particular situation, you have been putting all the statuses on the invoices and eventually you clubbed it together. And now what you have, let's say, three major reasons here that you must follow. So you can't chase everything in one point of time. So you need to prioritize. In this case, on your screen, you can see point number B, D, and E. These are the three priorities I will pick them up and I will make all the corrections and controlling, I would say, steps from my side. When we talk about corrective measures and controls, that is also one of the important areas. So the details are there. We have all the causes for that late receivable payment. And now next step is that we start improving and putting the right and corrective measures and actions in place. This will allow for continuous improvement as well, because every month you will look at that, let's say, statistics, and it will definitely change. And if it's not changing, then we need to go back to the root causes and fix them. And that will help to evaluate and understand our internal processes as well. That's very important. So I will take another pause here and I will bring yet another, and I promise this is the last one. The cash discount is given to the customers for early payment, good business relationships, bulk purchase, or frequent purchases. So which one is the right answer? And only one of them is right. So let's have a look which one is the correct one. So early discount is given to customers for what? Why we give them this discount generally and in accounting as well. There we go. So we have results here and most of the results are correct. Very good. I'm proud here to see that so much good professionals are online with me. Very right answer, early payments. Yes. So we always give cash discounts to our customers for paying us early. That serves as an incentive. Very good. Thank you very much for the feedback. I'm so happy to see this. Then let's move on. And okay, my slide is not working. So I'll move on, and yet another, I will say, quote that I have. If I had to run a company on three measures, those will be: number one, customer satisfaction; number two, employee satisfaction, being a people manager; and number three, the cash flow. Very well. I think I can't agree more on this. So with this, I'll move on now quickly to the next part. How to shorten the circle of this cash collection. So first and foremost thing that I see is that we must invoice promptly. I'm sorry if the presentation is not very much visible, but I'll speak it out and I hope I can explain it. So always issue an invoice to the customer as soon as the delivery of your equipment or the services are completed. This is very important to raise it as soon as possible. The moment you will delay your invoicing, you're also delaying your collections. So the moment you are contractually obliged or qualified to raise invoice, immediately do that. That's the first thing that you have to do. Secondly, be proactive. Contact your customer before due date. Don't wait for the due date. And you can build relationship with your customer. And it's also cost effective to contact those customers with larger outstanding receivable balances prior to their invoice due date. The reason is that you may uncover a payment problem as well that you can start working on immediately. And by the time the invoices are due, you can sort it out as well. So rather than waiting for several weeks and then getting to know that there's a problem, I think this is the best approach to do that. Then dunning letters. I believe this is also very important. And if you have a good software, then use that software to send out a good dunning letter automatically as well. So this is something also very good to have. There are a variety of ways of sending out dunning letters to attract attention of your recipients. So this is very important in my opinion. Obtain payments of undisputed amounts. So whatever is not disputed, at least that is a low-hanging fruit. So collect that as soon as possible. So don't wait for the others to be resolved. So if a customer is complaining about a particular line item on an invoice, then insist that customer pay all of the other line items at least, so that what is being fixed, we will see that later. If possible, make personal visits or customer calls. As I said, in these circumstances, it's not possible, but really, if I can, I will go to the customers and I'll meet them face to face. The collections face to face is entirely a different, I will say, mode, medium, and it has its own perks. So that's the best if you can do that. Also known as nasty grams, attorney letters. This is a threat of legal action. So worst case scenario, you have to go for this kind of threat that, hey, if you're not going to pay me, I'm going for the legal direction, because that's my legal right to go for that. But that's the last resort that we have. And if the things are not working well, then you can engage one of the, I'll say, other department as well. This is one of the keys that I believe to shorten the collection cycle. Be one team. Be one team with your sales organization. Be one team if you have a logistic organization or whatsoever is part of this O2C cycle. Be one team. If you will act as a one team, this will benefit your customers as well. And this will help to shorten the IQI or quality issues cycle as well. And then turn over to collection agencies. In a case, if no other method works for you, then turn over the account to a collection agency, which may be more aggressive in its collections activities than you are willing to be. So I think that can help you as well in that direction. Now I'll quickly move to the last item on my agenda. That is the collections tool, smart tools to improve the cash flow. So when we look at a collections tool for your organization, the first and foremost thing that you need to look into, what are your requirements? So every tool is not for you. You need to see what is the size of your business, what is your working capital, broadly defining the assets and liabilities you have, and what can be good and beneficial to address your cash flow and liquidity issues. That's very important. So this is very important to see that what you really need. And I believe it's more likely to get efficient results if you have a tailor-made software, though it will be a bit expensive. But there are so many ARM softwares based on your needs that can be tailored for your needs and can be aligned as well. So really a good recovery software or collection recovery software can deliver higher promise to pay days to you. So there are so many softwares. I don't want to name anything here, any software here. There are so many small and medium and big organizations making softwares for so many organizations that there is no limit to that. And I don't want to highlight any one of them here just to give a negative or positive. I think all of them are doing a good job, and they're doing good debt management services in their softwares. So that was more or less it from my side, guys. We'll still have one more topic, and that is kind of a bonus and a gift from my side to all of you. The Global Risk Report that has recently been published for 2022. The 2 years of pandemic yields insight on resilience in this report. So for the next 5 years, correspondence against single societal and environmental risks as the most concerning put it forward. However, over the next few years, at least a decade horizon, the health of planet is dominating there in terms of the concerns. The environmental risks are there also, but you will also see a debt crisis there. So this makes this report very, very interesting for collections professionals. That's why I brought it here for all of you. Please, when you will get this material from my colleagues, you should click on the link down there and you will direct it to the PDF file over there. Do walk through that. There are quite interesting and revealing, I will say, topics over there of your interest. I'm pretty sure you will enjoy that. That is from my side. And I've also added a few acronyms for you to have a look at in a case if you get the material. Very generic, but I think it will be helpful for you as collections professionals to know and understand them. And with this, I would like to thank all of you for being very patient here. And before I sign off from this, don't forget to join in June the Credit Congress over there. And if you want to see more details of it, you can log into NACM's website as well. Once again, thank you very much for your patience. And I will, as a matter of fact, stop sharing here, and I can see if we can answer any questions. I don't know how efficient I am with the time.
The lines will remain muted during the Q&A portion of this presentation. As a reminder, to submit a question, simply type your question using the Q&A feature, and I'll give it 30 seconds to a minute to see if we have some questions come through.
In the meanwhile, I could see that Thomas Baker have written down that KPI should be done weekly. I think quite assertive, or rather a little bit more aggressive to be weekly, but I can't disagree with this. Very well said. The more proactive you are with reviewing yourself and your KPIs, the better and efficient it is.
All right, I do not see any questions at this time. So with that, on behalf of the National Association of Credit Management, thank you all for joining us, and a special thank you to our speaker. The code for this session is CashFlow22. Please use this code word during your quiz for CEU credits. Have a great rest of your day, and we'll see you next time.